Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott, and today we're going to be speaking about early stage and seed investing. What's happening, what's not happening, the platforms, the opportunities to fundraise, and how that landscape has dramatically changed over the last few years and opened up a new wave of raising opportunities if you're looking to build a company today. So what does that mean and where are those? We're going to talk about that here in just a moment. But thank you so much for tuning in. If you like what you heard, click subscribe. Also check out the archive on LATOKEN.com to hear not just from all of our investors we're about to introduce, but the entire VCTV family as we bring together the best and the brightest from around the world to share with you their thoughts and insights around different technologies, industries, and regions as well, including topics like today around early stage investing and seed investing. And if you'd like to be on the show like today as an investor or as an entrepreneur, do reach out to the team and or myself and we'll find that right spot for you. Speaking of the team, a big thank you to the LATOKEN team and to Maria and Hasmik for making VCTV possible, as we could not do it without them as they bring us together every day and make this show happen. With that, let's go ahead and introduce each and every one of our guests as I'm your host, Kyle Ellicott. Jason, welcome back to the show. A little intro, a little background.
Great. Well, thank you for having me back here, Kyle and LATOKEN. It's great to be on this panel. So I've spent over 20 years in the Midwest part of the U.S. working with early stage companies and investors, whether it's helping them raise capital, running different programs to support them and the ecosystem and connecting them to resources. I currently run the Founder Institute chapter in Chicago. I'm doing that for the last 10 years. So I see a lot of pre-seed, seed stage opportunities. And then I also launched Propellant Ventures, which is focused on investing in pre-seed and seed technology businesses throughout the Midwest in the US. And we're focused on B2B industries such as healthcare, future work, fintech, edtech, and supply chain. So I spend most of my time in the early stage world. And so we see a lot of great opportunities throughout the Midwest of the US to invest in those opportunities. So I'm glad to be here.
Thank you, Jason. Glad to have you as well. And I'm looking forward to talking about the Midwest and how the early stage environment has changed there, not just with yourself, but a few other investors that have really stepped up and put a lot of capital to work in the region. So we'll be back on that in just a moment. Ifran, welcome back to the show. A little intro, a little background.
Thank you, Kyle. I'm happy to be here, and thank you to the audience for tuning in and LATOKEN. My name is Irfan. I'm the managing director of Irfan Holdings. I've been in the early stage investment for more than a decade now. I sit on a number of funds as a board, but I also actively deploy capital in idea stage as well as early stage ventures individually before they move into my funds. So I'm always looking to be involved in this space, specifically in the emerging technology category, and looking to facilitate founders move their company through these stages. So thank you, and back to you, Kyle.
Wonderful. Thank you, Ifran. Next up, Raghu, welcome back to the show. A little intro, a little background.
Hi, Kyle. Thank you. I'm Raghu Rao from Princeton, New Jersey. I'm a serial entrepreneur, angel investor, and strategic advisor. I have an advisory firm that helps companies early stage to go from seed to harvest. I'm interested in the biotech, green tech, cybersecurity, clean tech, and fintech areas.
Wonderful. Thank you, Raghu. Swati, welcome back to the show as well. It's a pleasure to see you again. A little intro, a little background. Oh, you're on mute.
Force of habit. But happy to be here. Hello, everyone. It's a pleasure once again to be here. My name is Swati. I'm the co-founder and CEO of PropelX, which is an online investment marketplace where we enable accredited investors worldwide to invest in startups. Our specialty is deep technology startups. We were the pioneers in starting to use that term. It is now a global thing, and we define deep tech startups as companies that are founded on breakthrough engineering or breakthrough science. So our sectors of focus are life sciences, clean technologies and green technologies of various kinds, computing and computing infrastructure. Those are the three big sectors. And then ag tech, industrial technologies, aerospace and transportation, they also are areas we work in. We also have a fund. It's called the Newton Fund. Newton Fund invests in companies that appear on PropelX platform. We focus on Series A stages. So Series A is our sweet spot right now. We've done Series Bs also. We've done Series Cs also. And we also do seed. But we don't do super early stage companies. Companies need to have had a proof of concept of some kind of traction in any form. So that's who we are.
Wonderful. Thank you so much, Swati, and welcome back as well. Gary Fowler, a Grandmaster of Artificial Intelligence himself. A little intro, a little background for everybody.
Hi, Kyle. Great to be here. Great to see everybody today. So my name's Gary Fowler. I'm a serial entrepreneur and investor. I've done 17 companies, been involved in 2 unicorns. I was on the original management team at Click Software, which was sold to Salesforce for $1.35 billion about 21 months ago. And also I'm the co-founder and former president and CEO of a company called Eva.ai, an AI HR tech company located in Silicon Valley. Today, I am the co-founder, chairman, and president of GST Get Shit Done Venture Studios. We curate AI and quantum companies from around the world using Silicon Valley as a port to help them go global. We are unicorn breeders. And we like to invest in early stage companies. We're actually building a $100 million impact fund out of Atlanta, Georgia. And we love AI because AI is the new electricity in all ways, shapes, and forms. And so that's it. That's us. Thanks, Kyle.
Wonderful. Thank you very much, Gary. And last but not least, Adrian, welcome back to the show. Are you with us there? It looks like your camera might be frozen.
Yes, I'm with you. Can you see me? Can you hear me?
We can hear you.
The technology. Okay.
You got a profile.
Yeah.
Hello, everybody. Adrian Nicol, entrepreneur and investor. I'm involved in a few projects. CloudCoin Consortium. CloudCoin is a post-blockchain digital currency. Faster Capital, which is a Dubai-based accelerator and incubator for startups. And also I'm a mentor in Richard Branson's Virgin Startups in UK. I work with a lot of early stage companies, and I like this very much because you can see the next Googles, the next Facebooks, the next big companies when they are just some ideas on some papers and a team of few people sometimes having just themselves and the laptops, which is pretty cool. Happy to be here.
Thank you, Adrian. Happy to have all of you here today, as this is going to be a fun, exciting topic. You're all investing at this stage and along with a little bit later, as we've spoken a lot about here on VC TV. But want to talk a little bit about how fundraising has changed at the early stage and seed levels. And the reason I want to bring this up, we had news just before the weekend around a company that had raised about $8.5 million on Clubhouse. We've had a number of companies raised through crowdfunding efforts. We've seen, again, the Reg CF raise from $1 million to over $5 million. We've got new funds coming out, rolling funds, allowing for investors of all shapes and sizes to start investing at an earlier check size. So much has opened up for companies looking to raise. But we'd love to hear from you guys. What's different? How are you looking at investing in seed-based companies as well, and maybe what your thesis has changed around that? And Swati, I want to start with you, as PropelX has really led a lot of these efforts. Shamelessly, I will promote you on that.
Thank you.
But also, you're welcome. Thank you. But we'd love to hear how you have seen things change for entrepreneurs looking to raise that seed round, and again, maybe how that has changed for you as an investor as well.
Yes, absolutely. So sorry I could not be on your panel on the social media fundraising last week. But I think that is relevant here because I just want to be clear. There are certain regulations around advertising your fundraise. You do have to be compliant. So there is a special, the Jobs Act said that you can actually advertise your fundraise provided you do this, this, and this. So that this, and this, which is to say you have to verify the investors has to be done. So if people are raising, it's very, so if people are raising on social media, they have to be careful, they have to be compliant. And it's reminiscent of the ICO times, right? The initial coin offerings where people were raising billions of dollars on ICOs, but you saw what happened. The SEC clamped down very quickly. A lot of those fundraisers were voided, and so on. So whoever is doing this on social media and advertising it needs to be very careful and compliant. So that's number one. The second thing that I do want to talk about is, just to answer your question, what do we think has changed? Look, we've showcased hundreds of companies on PropelX. We've closed 83 plus rounds. 22 million has been transacted through our platform. Our fund itself has invested in 24 companies, and we've been seeing how things have been changing over the years. So one of the things that has changed is that it has become now received wisdom that you should have a profile, for example, on LinkedIn, and that you should raise from these alternative sources of capital. It was a matter of time when these things came to the fore. Startups were concerned, oh, how does it appear? What are people going to be thinking about us? That there was this concern around adverse selection on platforms. Mm-hmm. But if you look at platforms, they have produced some of the highest returning startups, and we ourselves have some in our stable which will be going out for $1 billion exits. And there certainly have been exits from platforms that were older, like AngelList, for example, where their companies have been acquired, but General Motors acquired, what was that, the AI company that helps autonomous vehicles navigate, Cruise.ai, one of the big exits. So now that these exits have happened, it has become clear that platforms, not just a legitimate way of raising funding, they're an excellent way of raising funding because you do it quickly. You don't have to spend, so many cycles pitching people and going through angel groups. And angel groups, I don't know if you're aware of them, but notoriously time-consuming diligence exercise, which stretches into 4 months, and then you get 100K out of it, right? So that is the problems that we are solving, that you can do it quickly. You can do it with minimum problems. And it is available worldwide, so you're accessing a global audience. So long as those platforms have a good history of helping you fundraise, I think startups must explore all sources of capital. So that's what we've been seeing change, is that it is now not just an acceptable mode, it's a preferred mode. I mean, startups kind of go to these platforms pretty early in their fundraise. I'll be honest, what does succeed on most platforms, though, is if the company has already raised financing a little bit from their offline efforts. That's when there's a greater likelihood of succeeding on a platform. So we're seeing some excellent companies, as we have always, and our fund returns, just so you know, are higher, probably the top quartile of our size, based on Cambridge Associate metrics. So that's that speaks to the quality of the companies that appear on the platforms.
Thank you, Swati. I couldn't agree more. I mean, that global audience changes the game for so many companies as well. I mean, not just having to, go solely on relationships as fundraising generally does, but now you can open that up to people you may never have met, people that may be strategic to you that you just didn't know at some point, and also can help you expand or grow your company in ways, again, that you may not have thought about previously. And Jason, I want to come to you next on this. I mean, looking at the Midwest and the companies that you invest in, how have things changed for those raising their seed round, and or seed rounds getting a little bit bigger in an area where they may have traditionally been a little bit smaller based on data as well, before anyone comes back to me on that one. So Jason, let's start with you.
Yeah, I would say that there is definitely more funding opportunities in the Midwest. There's more early stage funds or micro funds that have come about in the last several years. There's more angel groups, more people paying attention to the Midwest, even from outside of the region. There's a strong push either way in the region to build everything up. And so, whether it's accelerators or more micro funds, there's definitely more activity. And there's a lot of good data in our region too, that we have some of the highest, if not the highest, investor returns out of any region in the country. And there's more data, more media, and more pushing of this region as a good investment opportunity. And a lot of founders continue to bootstrap before they raise professional rounds, and that also helps to help with the returns where VCs don't come in until a little bit later and push up those valuations. But at the same time, some of these micro funds are coming very early, investing alongside angels or angel groups, much like Propellant Ventures does, to add that professional investment, professional due diligence, and really help raise additional capital for those companies. So yeah, I'd say the last 5 to 7 years, we've just seen an increased activity level in the region, and it's really assisted with the growth of all the companies, but the region as well. So there's more and more activity happening on a regular basis, but we have a lot of great companies, great founders coming out of this region.
That's great, and thank you. And Irfan, I want to come to you to see if you have anything to add, and then I have an industry-specific question for you. But anything else to add on kind of how seed investing, early stage investing has changed for founders, and have rounds started to get a little bit larger at this stage than traditionally?
No, first of all, Kyle, I would agree with both Jason and Swati, what both of them mentioned, which is essentially, of course, it was about time that these kind of platforms are being utilized by founders, and there's plenty of opportunity. But I always prefer also the alternate option, which is, of course, it's like a ticking time bomb. And what Swati just mentioned, that you got to be very careful how you're fundraising and how informations are being distributed. As Swati rightfully mentioned about the ICO, I mean, ICO isn't just the only incident, and me being active in this space, got to be fully honest, right? I mean, I've been both in parts of, really successful project, but, also part of, some pretty unsuccessful projects too. And the point, what I'm trying to say is that, there are plenty of ways that that you can circumvent through these kind of platforms also. So you got to be careful, and I think things are going to become more and more, I would say, transparent in the coming days, which is what I look to achieve and look to see, which is going to be helpful for investors, and it's going to also enable this platform to onboard companies globally. So that's kind of like my high-level take, but happy to jump into more industry-related questions that you may have for me.
Yeah, so right on the heels of that, space, edge, IoT, and energy, all three great industries that continue to flourish, some in their earlier days than others. But starting companies in this space is not necessarily, how do I say, low cost. There's a lot of upstart capital that needs to be put in, especially if you're in the energy or the space sector. What have you started to see maybe change about investors' views on investing in these companies and the larger rounds they may be taking in their first fundraising effort?
That's a great question, Kyle. So first of all, I'll give credit to all the industries over there, specifically the ones that are leveraging or are based out of hardware, right? So hardware is a completely different play than software. So investors must understand, or investors who are getting into that space must understand the dynamics, even the timing, and the returns are very different than a traditional software-based startup or company. But that said, you're definitely right. In the earlier days, it was much more difficult to be able to create and build a hardware startup versus a software startup, because of the technical challenges that are associated with it, the people, the amount of capital that you require, and of course, most importantly, the facilities that you may have. That's going to play a big part. However, today, and as you mentioned, space rightfully, there are interesting avenues that people are using, right? So space itself is a very small community. Everybody knows everybody. So, and those who are building startups in that space are able to leverage each other's resources, which is quite interesting, because, and I do think, this is an interesting scenario where each space startup understand the need to coexist, which is why they have been enabling each other for some time. One example would be Orbit Fab. It's a company that we through our space fund have invested in, which is and they have been collaborating with few other ecosystem players, sharing resources, and these resources which may seem quite expensive to be part of. So I do see that kind of ecosystem plays a big part. So in the long run, as I say, some of these hardware companies may be leveraging something similar. We have seen that in the blockchain industry. We can see that in other hardware industries. But overall, there are other things that I definitely would love to point out, is that there is an increase of co-working or co-using facilities or research facilities, which are now increasing, and I would see that providing a lot more opportunities to hardware-based startups in the coming days. Back to you, Kyle.
Thank you, Ifran. I think great points and as well. And Raghu, I want to come to you next on this. I mean, similar question, but focus more around bio and pharma. And then I'll have a separate question about security. But bio and pharma, again, these are companies that you can't start respectfully with just $1 million seed round. You need to raise generally much more capital to really get going in these areas. I mean, have you seen anything change? Are you as an investor or other investors looking at these companies differently, and not the size of the round, but really where they're going and what they're building, which traditionally is a little bit of a change to, again, what many have looked at as a seed company?
You're exactly right that I think depending on which vertical companies are in, the fundraising kind of changes a little bit. So for biotech, what I look for is de-risked opportunities where for instance, they're past the discovery stage. Discovery stage is where there is usually, a lot of failures, as you call it. So we want to fail early. And in my case, I'm looking to go past the discovery stage. I look for social impact, as well as companies that have a platform, not necessarily one or two assets, but a platform where a lot of assets can be moved. So typically, I think the biotech companies, you need to have enough to go through the preclinical stage and get meeting with the FDA, and then you can raise money to do the regulatory stuff, the clinical trials, right? So that's the part where I get involved mostly. Usually, I take a small stake, and then I help them with the strategy and the fundraising and advisory role. So I think one of the things I've noticed is that as far as the early stage funds go, I think there seem to be a lot of the bigger funds are getting in on earlier stage, and they seem to have more money than some of the smaller funds that were involved before. But I agree with what Swati was saying and some of the others, that the platforms have become much more better opportunities, more optimized once you have raised a certain level of funding, so that you have a little bit of runway. Then you can go onto the platforms such as PropelX, AngelList, and I think also people are getting more used to doing due diligence remotely. And typically, what I focus on is to get in an early kind of subject matter investor, somebody who has subject matter expertise in that space. So they have done a bit of due diligence, not necessarily at the institutional level. So other investors can basically piggyback on that, and so they can, they don't have to worry so much about doing due diligence because somebody in that space has looked at it and can talk to it. So that's on the biotech. In cybersecurity, I think after this pandemic year, things have changed dramatically because of the need for accelerating solutions has become urgent, and I think a lot of solutions have come forward, and again, both cybersecurity and data privacy, right? Both of them, and there's a lot of opportunities there, and I think it is urgent, and there's a lot of money available. InQtel just announced the Emerge IQ fund, and so I think a lot of them are going in, and there's also opportunity to get non-dilutive funding from the government as well, so grants.
It's a great point that's usually not talked much about around early stage investing, especially here in the United States, unfortunately, is the amount of opportunities around grants and investment schemes as well, where either the government or institutions or universities are able to make capital-based investments, but non-dilutive. As well. And Raghu, you're pointing out some great areas, and also Efron mentioned a few around energy and space, that these grants exist, and you can do that. We see a number of this activity around the blockchain space as well. So something to be mindful of. Again, it doesn't happen much here, or hasn't traditionally in the past decade plus here in the United States, but in other emerging markets or other countries as well, we're seeing that as kind of the norm to go to first before even that seed stage capital as well, right? Raise a little grant money and then go from there. Gary, I want to come to you around AI. I mean, right now, artificial intelligence, as you start a company, you can start one for very little in terms of capital resources, but you can also grow that very quickly and start raising a lot of capital much faster than other industries, as we've seen recently. What has changed around AI companies at the seed stage, and how are you looking at them differently as an investor now that they're starting more and more, and again, earlier and earlier? Oh, Gary, apologies, you're muted there.
Can you hear me, Kyle?
Yeah, loud and clear. Thank you.
So what I was saying is, the seed stage with Eva, I raised $7 million. So, I mean, we started from scratch. So there's an appetite based on the team, based on the technology, and based on the opportunities. So what I'm seeing now is the multiples are really high. And of course, because of all the data around us and the issue with the state of infobesity, companies are willing to, so corporations are willing to invest. I talked to a lot of venture funds from around the world. And the other thing is, Kyle, it's not just about the US, it's about all this incredible activity around the planet where investors are coming in, whether they're from Asia or Europe. I mean, I raised money from Israel. I raised money from China, all over the place. So the good news is the appetite's out there. The situation is, the beauty of it is you've got to get in front of those folks, and the pandemic has offered some interesting opportunities, just like VCTV, to be able to get out in front of them, to be able to get your message across, and to be able to talk about that opportunity. So the other thing is, what we're finding is that, the skills that these CEOs need to have to be able to get their message out, they have to have them finely tuned today, which is a little bit different than before. I mean, it offers challenges, and they've got to be, Zoom comfortable, if you will, to be able to get it out. So, I mean, we're finding them. The thing that's really interesting from our standpoint too, on the early stage companies, the typical place where you find them has changed a lot. We're finding companies. We just signed our first company from Africa, South Africa, Australia, Indonesia, Germany, of course, has them, but it's a lot different than it was before, because this opportunity, intellectual capacity is evenly distributed, but opportunities aren't. And now with the whole push towards this digital transformation, it's offered these early stage companies an opportunity, but it's also set up some challenges.
Yeah. Well, and speaking of challenges, Adrian, I want to come to you next around the space of digital currencies and also blockchain as a whole. And what have you seen really change in the last probably 90 days as a seed investor looking at companies in that space from an investor standpoint?
First, I saw an idea last week, and I like it very much. People need passports and visas, but businesses don't, especially the online ones. And one thing which I'm seeing over and over is that the next big thing can come from anywhere, Speaking of grants, Romania being a country, and no matter where I'm doing businesses, I'm always looking at what happens in my country of origin, how to say.
Mhm.
And Romania is not serviced in VC terms at its potential, and there are available many grants and programs from European Union. And I'm working with a team to build a fund, basically, which is also partially funded by one of the vehicles of European Union for early stage startups. I'm seeing that it's easier than ever to pitch whoever you want to pitch, because almost everybody is willing to have video call with you, of course, if the project is interesting, because all the important investors are bombarded with hundreds and thousands of pitches. So it's very important as a founder, and it became more important than ever, because we all have like the same vehicles. If we don't travel, if we don't go to events, we only have a screen, a laptop, an email, or a message on LinkedIn. And it's important to gather or to hone your communication skills, to be able to get attention, to be able to put a message in a very short sequence, so to get attention and to have a hook to trigger the interest, because otherwise your pitch, your idea will be left in the mediocrity of the pitches, which are not seen by anybody. So more than ever, founders need to learn copywriting, need to learn how to actually make their idea interesting, so the investors, the ideal investors, to come and look and to read further. And also, and I want to close here this this part of my panel, is more important than ever to hone very well your ideal investor persona. Because when you are looking for a type of investor, you can say, okay, I have a list of 7,000 investors. I'm contacting all of them. It's a huge waste of time. It may take you 1 year to do that. Look at the ideal investors which could be interested in your pitch, and go after them.
Good point, Adrian. Thank you very much. And where can everyone find you online to continue the conversation as well?
I can be found on LinkedIn. LinkedIn is my main communication hub. I'm answering to all messages, not all the time immediately. I'm happy to help and also to contribute to this amazing exercise of online education, which is VCTV. Thank you very much.
Thank you very much. And Jason, coming back to you, a piece of advice in your closing thoughts here for those companies looking to raise their seed or early stage round in the Midwest, now in a situation where we're still a little bit distanced. Any advice that you would have for them raising that first round? And then also, where can you be found along with Propellant Ventures for those looking to continue the conversation?
Sure. I would say the similar rules still apply. Find a good relationship or get a good referral to an investor. And then as you get to understand who that investor is, look online, you look at the investor's profile, the investment criteria. So be prepared for that conversation. But either way, a good referral is always going to be more beneficial than a complete blind reach out to an investor. So people can contact me on LinkedIn. That's my best source, but also email me at jason@propellant.vc. Thanks again for having me, Kyle, and LATOKEN as well.
Thank you very much, Jason. Raghu, same question to you, except this time advice for companies looking to build in the bio or pharma space and raising their seed round. What advice do you have for them? And then closing thoughts as to where you can be found.
Yeah, I think the team is very important to have a well-balanced team, and the team also needs an extension, that is the advisory team. The advisors are very important. That is the world from which I came out. I used to run a Vistage group of peer advisory, peer advisors for CEOs. So I think there's a lot you can learn from the advisory board, and they can also help you with introductions to investors as well as to potential customers. So team culture is very important right from the beginning. People think that they can, kind of worry about the culture when you scale, but it's important to have that right from the beginning. It's non-negotiable, and then a good plan as well. So, and have enough runway before, and when you try to raise money, raise enough, and you start the process early enough so that you're not in desperation when you go out to raise money. I can be reached at on LinkedIn at Raghu S. Rao. And I'm happy to help and welcome people reaching out.
Wonderful. Thank you, Raghu. Efron, same question to you, except for companies building in the space and energy sector, advice that you may have for those, and then where can you be found online as well for those looking to continue the conversation?
Great, thanks, Kyle. And again, because I represent myself individually, I'm not talking on behalf of my funds. I don't expect you to know everything. In fact, I don't expect you to figure everything out, but feel free to reach out to me. But the things that are non-negotiable is that, just make sure that you know that you really want to tackle the problem, you understand the problem that you're trying to tackle, and being authentic is a critical factor, and committed to what you're trying to build. The rest definitely can, be worked out over the course of time. And this is where I come in, and, all the other ancillary networks also come in. So looking forward to being and connecting. You can easily reach out to me through LinkedIn or Twitter. Twitter at Semper Irfan, and LinkedIn as with my name, Irfan. Thank you. Back to you, Kyle.
Thank you, Efron. As well. And Gary, same for you, artificial intelligence advice that you have for companies in that space, but then also where can you be found along with GSDV for those looking to connect?
Yeah. So advice, one is the team's critically important. Two, in terms of advisory board, it's important. We always we like to have somebody that's in security because it always comes up no matter what vertical market you're in. Two is somebody that's got a lot of VC expertise. Many times we'll find somebody like a Bill Reichert from Garage Technology Ventures. And the third is to have somebody that has had a recent success. It's just you want to build a 360-degree view. The other thing is I want to make sure that those companies have done their customer discovery and customer development to make sure that their product's validated and people really want to buy it. I think it's a great time for artificial intelligence. The data, the state of infobesity around us with a massive amount of data, it's a good time to build those types of companies across multiple verticals. You can reach me, Gary Fowler, on LinkedIn. You can reach me on Twitter. Love to hear from you, and stay tuned for my shows. I have one tomorrow with a VC from Seattle, Washington, the former #2 guy in the U.S. military, 4-star admiral.
Wonderful. Thank you, Gary. Definitely recommend tuning into Gary's show as well if you haven't before. Thank you, Gary. And last but not least, Swati, advice for those looking to go into crowdfunding, maybe for the first time, and looking to put together that seed or that early stage round, and then also where you can be found along with PropelX and team.
Yes, absolutely. So if you're raising financing, we focus on deep technology companies. So if you're leveraging science and tech and changing the world, and you're far enough along, please come to PropelX, propelx.com. You can apply right from there. The one thing I would say is that if you're raising seed financing, or Series A, or to be honest, any type of financing, speed is of the essence. So you need to set a start date and a finish date. You need to have a very well-run kind of process where you're using a CRM that keeps you on track. And there's lots of free CRMs. We also have our own. Use a CRM to keep you on track. Speed is of the essence. And the reason for that is every dollar that you raise and you haven't completed the entire full fundraise, you're carrying a team and you're burning that dollar that you already raised. So please have a speed in mind. the other thing I would say is that platforms are super important. I mean, that's what you asked. So there's many platforms out there. Depending on what you're doing, I think there are some that specialize, for example, in solar, that specialize in infrastructure, that specialize in real estate. So whatever it is that you're raising financing for, there's a platform that exists. Please utilize that. When you're evaluating the platform, please ask for the following metrics. How much is the average financing raised per startup or per opportunity that is on your platform? How long does it take? What is the kind of diligence that you do? Who are the investors? Who manages the investors? And do I have to be, or does the entrepreneur have to be in direct contact with any of the investors? So those are some of the tips when using a platform. It's important to do your diligence even when you're using a platform, understand what success they've had. So that's who we are. In order to find me, please connect with me on LinkedIn. It's my name, Swati Chaturvedi. You can find me on LinkedIn. Follow me on Twitter, Swati_PropelX on Twitter.
Wonderful. Thank you so much, Swati, Gary, Adrian, Raghu, Efron, and Jason for sharing your thoughts and insights about what's happening in early stage. This is a very important time for a company. If you're going to look to raise capital, it's your first round. It's very important that when you do talk to investors and who you raise from, because they will be helping you to grow your company and be on that journey with you for a long time, hopefully as well. So you've heard a ton of advice today. Go out there, raise some capital, and also check out each and every one of our investors. Make sure you do reach out to connect with them as well to continue the conversation if they're an investor fit for you in investing in your category or industry as they expressed where they are each investing as well. And thank you so much for tuning in. If you like what you heard, click subscribe, share, check out the archive on LATOKEN.com as we bring together the best and the brightest to share their thoughts and insights and on-the-ground perspective around different technologies, industries, and regions around the world. You can hear more from all of our guests today, along with the entire VCTV family from around the world, again on LATOKEN.com in the archive. As we have all of our conversations around technology and industries as well on there. And a big thank you to the team that make VCTV possible every single day, the entire LATOKEN team, Hasmik and Maria as well. We couldn't do it without you, and thank you very much for bringing us together every single day. With that, I'm your host, Kyle Ellicott. You can find me everywhere online at Kyle Ellicott and all social media platforms, along with all of our investors today. And again, make sure you add context when you reach out, where you heard us, where you met us, and what you like to continue the conversation about so we can be efficient and effective in our discussions. And with that, we'll be back here tomorrow with more VCTV. Everybody have a wonderful day.
Bye.